We're doing microlending on impoverished countries. My name is Josh Belli.
And I'm Jake Kelderman.
What is microlending? The basics of microlending. Microlending involves granting very small loans to people in need. These loans are generally used by entrepreneurs, people wanting to start a business, or those who need extra cash to expand. Microlending is unique because of the motivation behind it, the size of the loans, and the people that can be involved in these transactions. The traditional mainstream lenders solely focus on earning a profit by charging interest on the loans that cover their cost. Microlending is a targeted option that is towards low income businesses or individuals that are looking to start a business, but they do not have the direct capital themselves to do so. They can't obtain capital because they do not have a credit history for a loaning system to go off of. Loan sizes, microloans can go anywhere from $25 all the way up to $13,000. To put this in perspective, the United States considers anything under a $50,000 loan a very small business loan. In the United States, microlending would not work because of the initial cost to investigate creditworthiness of individuals and just the low cost on the loans and not being able to provide adequate information for each of the loans. The history of microlending. It was started by a social movement by Muhammad Yunus in the early 1980s, and it was initially seen as a golden ticket to lift millions of people out of poverty. The problems with microlending started to rise when banks saw this as a way for them to grow their customer base and expand into the growing marketplace. At some point, they were not seen as a social mission, but it was seen more of a market base to push the banks further into each of these countries. Some of the other problems arise when many families and small businesses were targeted by a large amount of lenders. Because they were overwhelmed by many investors, they ended up paying high rates, and many of the members tended to default and became hopelessly in debt after the loans. Today, microlending is being pushed further and further using technology with mobile devices and fingerprint scanners to ensure the accuracy of the clients that are using them. Now, smaller institutions can make loans that are not going out for profit, but rather based on a social mission that they have decided. Why is microlending helping? Traditional banks use a way of checking the credit worthiness of an individual. One of the many ways a traditional bank, BTPN as an example of this, has been distributing a credit roll to customers by developing a psychiatric tool system. This system uses behavioral data to streamline and strengthen the underwriting for customers who do not have a credit history. This specifically helps Indonesians and helps them reach some of their customer base they would not have met otherwise. And now I'm going to hand it over to Jake.
As Josh stated previously, impoverished people struggle to start businesses because of a lack of access to credit. Banks are afraid to make loans to people who are not in the same demographic as previous lendees who paid back their loans. One solution to this problem is a startup company, Atticus Insurance, which provides credit insurance and tools to enable banks to approve a greater number of loans at affordable rates. Atticus Insurance was founded by Kate Waska and Mary Mynan, who based their company name on the character Atticus Finch from To Kill a Mockingbird. In fact, they used this quote to help explain the company mission on their website. You never really understand a person until you consider things from his point of view, until you climb into his skin and walk around in it. The Atticus Company philosophy explains that they are a for-profit company that uses technology to help improve the lives of impoverished entrepreneurs. Atticus uses their credit tool Loan Scout to achieve their goal. Loan Scout markets itself as a mobile tool that connects lenders with borrowers. Its interface is easy to use, cost efficient, and reflects the way business is conducted in impoverished markets. Loan Scout combines data analytics and risk transference to help financial institutions reach more clients. This, in turn, improves economic opportunities for low-income individuals. To use this service, organizations provide Atticus with company information. Then, Atticus will give them an individualized proposal. Atticus is currently on the right track to becoming financially viable. The business world is beginning to take notice. CNBC named them as one of the hottest startups. In addition, Atticus successfully closed its first phase of financing from friends, family, and angel donors. As of right now, there is building interest among venture capitalists and insurance companies.
In conclusion, microloans are a very vital part of the communities in many of these countries. It is a way for low-income individuals to have the dream of owning a business and have the external capital to grow the company without putting a house up to own the capital. And here are our sources.